All right, and welcome to the Atlanta Landlord Luncheon, guys. We're so excited to have you joining with us. Each month, we meet up here at the HobNob Tavern to bring you amazing updates, market information, education for buy and hold investors who are looking to build wealth through real estate. And so I'm here with Chip Cagle of Longhorn Investments, who's going to be our speaker today, talking about hard money loans and everything you need to understand to fund your next deal. Again, my name is Matt Martin. I'm with PMI Georgia. We manage over 500 properties throughout Metro Atlanta, most of which are single family, small multifamily, so duplexes, quadplex, townhomes, those kind of things. And if you are interested in renting out a property, or maybe you have some properties you've been trying to rent out on your own and you're having a hard time, we'd love to take those over for you and show you how we can make that a pain-free opportunity for you to collect passive income. So without further ado, I'm going to hand it over to Chip, who's going to be our speaker for today.
All right. Thank you very much. Hey, everybody. Chip Cagle with Longhorn Investments. And you'll hear all about Longhorn Investments during the presentation, so I don't need to get started with that now. But I do have to tell you about a situation I'm in today. I made the mistake of going to the eye doctor before coming here, and they dilated my eyes. And so I'm going to have to wear my glasses when I'm presenting so I can see the screen in front of me. All right. Apologize for that. Anyhow, so let's get started. We're going to talk about hard money loans today, and hard money loans for real estate investments. It's a guide to financing your real estate ventures. So first we'll talk about what is a fix and flip, and then I'll tell you about hard money loans. We'll go through the advantages and disadvantages of hard money loans, how to qualify for one, how to secure the best terms. We'll go through some case studies, and then we'll have questions and answers. So what is a fix and flip loan? I have to shift something here so I can see it. All right, there we go. Whoop, one more shift. Sorry about that. So a fix and flip loan, it's a real estate investment to acquire, renovate, and sell for increased value. It's a focus on repairs and improvements, balancing for profitability. To be successful, you'll need to know your market. You'll need to have renovation expertise and accurate cost estimation. So the high level of overview of the process is you want to find distressed properties, maybe foreclosures or short sales. Could be other ways to acquire properties. You want to have a detailed plan with a budget and a timeline. And then you want to check comparable properties, comps, to estimate the ARVs. Find a good contractor to meet your needs and oversee the construction. Transform distressed properties into your vision, and then complete as many as possible to minimize the cost, as quickly as possible to minimize the cost. Next, you want to list your property for sale or start a refinance into a rental loan. And you want to use quality marketing to attract buyers. You should use staging so that your buyers can visualize what the home's going to look like. And then you want to negotiate your offers and analyze the net profit. Okay, so your profit potential. Your profits may be significant when you're done correctly. It's usually a short-term investment. Consider keeping some of the properties for rentals. The risks. There's market volatility with unexpected changes in costs under value. The renovation cost overruns from unforeseen issues. Delays and holding costs, zoning permits, structural issues. The market saturation and competition may take it longer than you expected. The importance of financing in fix and flip ventures. Requires significant capital for acquisition, renovation, and carrying costs. Oops, I hit that too fast. Hang on. You want to negotiate your, let's see. There we are. Usually a short-term investment. Consider keeping some of the properties. What are the risks? You'll have market volatility. I think I already did that, didn't I? All right. You'll have delays in closing costs. The importance of financing in fix and flip ventures. Requires significant capital and for acquisition, renovation, and carrying costs. You're going to have proper financing ensures liquidity and prevents financial strain. Risk mitigation strategy and avoids opportunity costs when you finance. All right, the need for financing. Why traditional loans might not be suitable. It's unsuitable for fix and flip, renovations, and short-term. The lengthy approval process with lots of documentation. You're going to have property condition requirements when you try to do a traditional loan, and you wouldn't have that with a hard money loan. The speed of transactions in fix and flip. Time is money, so you want to minimize your holding costs. Profitability increases when the entire process is quick. Market conditions and costs can change. Scaling the business, you get more projects completed per year. The importance of cash in negotiations. All cash offers sets you apart from other investors. It instills seller confidence by eliminating uncertainties, and it may reduce purchase price since seller expects you'll be able to close. What are hard money loans? It's a loan on a hard asset. It doesn't mean it's hard to get. It's actually easy to get and with quick access. It's a short-term loan that's for quick turnaround, usually 6 to 12 months. There's higher interest and reflecting risk. There's also lower loan-to-value ratios mitigating that risk. The key characteristics of short-term asset are key characteristics. It's short-term and it's asset-based. The short terms align with quick fix and flip timelines. The values property over credit or income. The role of private lenders. You have time-sensitive opportunities and you want expedited approval for your rapid success. I'm talking about people that you know that understand what your goals are. The advantages of hard money loans. You have the speed of approval and funding. Speed is the key to success for a competitive advantage. You'll have quick approval and funding for time-sensitive deals. It avoids missed opportunities. There's flexibility in your terms. Focus on investment opportunity, property potential over credit history. So the lender looks at your property potential, not your credit history. It's an interest-only loan for cash flow management. It's asset-based lending, so your credit score is less critical. You want to focus on the property's value. It reduces emphasis on credit or income. Lastly, the accessibility for those with less than perfect credit. It overcomes the challenges with traditional lenders, recognizes the profit potential of the property, levels the real estate playing field to allow capitalizing on market dynamics. The disadvantages of hard money loans: higher interest rate. They charge a higher interest rate because it reflects the risk. It's usually 8 to 18%, maybe even more. Substantial project costs that erodes profit margin. Magnified with project delays and extensions. There's short repayment terms. Limits your project scope to focus on smaller projects. Strains on cash flow that requires careful planning. It's asset-based, not borrower-based. The emphasis on collateral value, not borrower ability. Risk of property value fluctuations. The market is constantly changing and hard to predict. Dependence on the value appreciation. Diversification of projects may reduce fluctuations. Qualifying for a hard money loan. You have the property evaluation criteria. ARV is prioritized by lender and used to determine the loan amount. The emphasis on location and neighborhood. You have comprehensive renovation plans. The importance of loan to value ratio. The current value and after repair value. The lender's going to need to know both of those numbers. They need for an appraisal to get an estimate of these values. The exit strategy, selling the property. You sell the property at retail value, or maybe you keep the property as a rental. You must analyze your market to see what attracts potential buyers. Borrower experience and credibility. Successful projects indicate capability. Market familiarity indicates credibility. So now we're going to go through a success story. This is what the house looked like when they first bought it. And this is what it looked like after they fixed it up. Here's another view of the same house. Here's the kitchen in the same house. Big difference. So what can Longhorn Investments do for you? I'm actually going to look up here while that's going on. Fix and flip funding. There's no experience necessary unless you're doing a heavy rehab or an addition. Longhorn can do 100% of your purchase and rehab. That's loan to cost, LTC. That's up to 70% of the after repair value. That's loan to value, LTV. If you're planning to keep it as a rental property, Longhorn can even do 75%. It's the same for heavy rehabs and additions. It starts at 2.99 points and 12.99 interest. Now, right now, we do have a special going on for the months of March, April, and May of 2025, in case you're watching this later. Instead of 12.99 interest, it'll be 11.99 interest. The loan would need to be closed before the end of June. After you've completed 3 loans with Longhorn, you're in the customer loyalty program, and the points would be start at 1.99 and the interest would be 10.99. During that 3-month special that we got going on right now, instead of 10.99, the people in the customer loyalty program would be at 10.49. It's a fast and easy close, usually in 5 to 7 business days after you've gotten all the documentation to us. You'll need a minimum credit score of 600, but 640 or above gets the usual terms. If you're between 600 and 639, you'd pay higher points. We were a 6-month loan. Starting March 1st of 2025, we went to a 9-month loan, but you can still extend for 3 months at a time for a fee, and that fee can be deferred to payoff. We have a loan minimum of $100,000. And there's also a minimum ARV value of $150,000. If you have a rehab budget of $150,000 or more, you can request as used interest. That means you wouldn't pay interest on the money until you've drawn it. It's easy to get pre-approved before you find a property. I can even get you a pre-qualification letter, a proof of funds, to present to your sellers when you're making an offer. New construction loan. You do need experience for the new construction loan with 2 new builds. We lend 90% of the lot purchase and the construction costs. That's loan to cost, LTC. And that's up to 70% of the after complete value. That's loan to value, LTV. The points are going to be 3.49 and the interest will be 12.99. So right now in the special that we've got going on for March, April, and May of 2025, the 3.49 will be reduced to 2.99. The interest is as used. When the construction funds are drawn, that's when you start paying interest on them. You have new builders can, if you're new, you don't have the experience that we need of 2 new builds, you can get an experienced partner. The interest only payments on the amount that's been funded to date. Minimum credit score, just like on the fix and flip, needs to be at least a 600. 640 and above gets the usual terms. 600 to 639 pays higher points. So we used to only have a 9-month loan for our new construction. As of March 1st, that changed to 12 months, but you can still extend 3 months at a time for that same fee, like on the fix and flip, that can be deferred to payoff. Here's the documents that you're going to need. I mentioned earlier that it's 5 to 7 business days after you get me all the documents that I need. We're going to need a tri-merge credit report, and we have to pull that. That is when you enter your application, we're going to do a soft pull, and then when you get me all the documentation, it'll be a hard pull unless you've already had one with us within the last 90 days. For entity documents, we need the articles of organization, the letter from the IRS with your EIN, that's employee identification number, and a certificate of good standing from the state. One more thing you would need is the operating agreement. We need 2 months of bank statements showing the hire of $15,000 or 25% of your rehab budget. We'll need a driver's license for all entity members. When you have a property under contract, we'll need that contract. and any amendments, or maybe you just have an assignment. We would use that too. Then we need an itemized rehab budget. And I would tell you that you need it to have it as itemized as possible so that you're able to communicate with the appraiser what you're trying to do to the property so that he or she can give you the best value for what you're trying to do. On new construction, we'll also need the construction drawings, the elevations, and the floor plans. All of these documents are going to be uploaded into our secure document portal. Tips for success. You're going to do due diligence on the property. You got to do thorough due diligence. You want to have a realistic and well thought out exit strategy. Are you going to keep it as a rental property? Or are you going to sell it? And if you're going to, that might make a difference in what you're going to do with the rehab. You might not need to fix it up as nice for a rental as you would for a retail sale. Build a reliable team. You need to look for good contractors, real estate agents, and other team members. You want to stay informed about market trends. It's good to learn as much as you can about the real estate market in your local area. I remember when I was up in Knoxville, Tennessee, at a real estate investors group there. The guy that led the group at the time, he knew so much about the local real estate market. He went to all of the meetings, all the city meetings where they were talking about anything having to do with real estate, and just kept his thumb on everything going on in the city. And he was very successful because of it. I also know a guy here in Atlanta that does that too. You want to stay informed about the market trends. So that's the way you do that. Get involved. Here's some risk mitigation strategies. These are ways you can reduce your risk. You can have diversification of your projects. So that's not only the kind of projects you're going to be doing, but also the locations. Some locations may be in a down market right now, while others are still going strong. You want to always do market research. What is the real estate market doing nationwide? What's it doing statewide? What's it doing citywide? What's it doing in the particular areas that you're concentrating on? You need adequate contingency planning. That's trying to figure out what you would do if something happened. What if this happened? What if I opened up this wall and found mold behind it? What if I found when I got underneath the house, I found termite damage? You want to build relationships with your lenders so that they're able to fund you as quickly as possible. So where does Longhorn lend? My territory is the major cities of Georgia and Alabama, but I can also assist in Texas, Tennessee, North Carolina, Indiana, Missouri, Ohio, Arkansas, and New Mexico. Here's my contact information. You can call me on my cell phone at 404-216-5599 or email me at ccagle@longhorninvestments.com. You can get more information on the Longhorn website, longhorninvestments.com. And when you're ready to apply for a loan or just want to get a pre-approval, that's chipcagle.flowify.com/apply-now.
All right.
All right. Thanks, everybody.
All right. Thank you, Chip, for leading our talk today, talking about hard money loans. So a couple things I think might be a question for new investors is that you guys only loan to LLCs. Is that right?
In Georgia, that's true. In those other states that I mentioned, that you do not have to have an LLC, but
Okay.
I'd recommend one.
Okay, so if you're thinking about getting started with flipping here in Georgia, you would need to start working on getting an LLC set up so that you could purchase the property through that LLC.
Right.
Um,
Let me say one more thing about that.
Yeah.
So since I've joined Longhorn, it could be any state, not just Georgia. You could form your LLC in no. When I joined, it had to be Georgia, but I asked why not, and they said it could be any state where we currently lend. But now that is changing as of April 1st of this year, 2025, that you can have your LLC created in any state.
Okay, awesome.
Okay.
And I guess a couple other questions. Well, one, how's the flipping market looking? People hear a lot of things about the market. You still have people who are flipping a lot of houses right now?
Yes, absolutely. We're still doing lots of loans. We had a record year last year. January and February were a little bit slow, but that's to be expected. It typically is. Yeah.
Yeah. So, I think it's pretty understandable why January and February of this year would be a little slow. I think a lot of people are hesitant and skeptical. But I do think the market this year will be pretty strong as far as acquiring properties. I think there's going to be some deals out there this year. So be on the lookout for that. If you come across an opportunity that you think might be good, feel free to reach out to us. We're happy to partner with you as well. So we can definitely connect you with people who can help with that. But I know that talking with Chip has really given me a lot of confidence in flipping my own house. So he's a great resource and somebody to speak to and seeing about funding your next deal. So thanks for joining the Atlanta Landlord Luncheon. Next month, we're going to be doing a market update because I think a lot of people are staring into that crystal ball trying to figure out where the housing market is headed. So next month, we're going to bring you a lot more information for buy and hold investors, for accidental landlords, people who have been relocating and wanting to sell, but maybe they can't sell for what they want, so they're trying to hold on to it as a rental, explaining that market as well. But we look forward to talking with you next month. So thanks again.
Thanks. Bye, everybody.